Hello, welcome to another Value Town Fund stock review. This one is going to be on AMD. Figured it was just a matter of time before this was chosen. This one was chosen by Twitch chat. A bunch of gamers out there want to upgrade their PCs and they have to decide Intel or AMD. And in fact, we covered a bunch of that in the Intel video, which ran really long. While I was reviewing Intel, much of the stuff I was reviewing, it applies here. Let's take a look at the Weeble of Value Town. Every single bit of money that I get from Patreon, thanks to the Patreon subscribers who help fund this Value Town fund, and from you guys signing up to Weeble using the link below, they all are used in order to purchase the funds and stocks in this account. Similar to last week, this is recorded after market closing, so I am currently unable to do my usual purchase of the VXUS and the VTI. I try to make sure that 50% of all the money deposited in and gained goes into the VTI and VXUS. On top of that, though, let me catch you up with the trades that I made for last week's episode. I was going to buy Microsoft and Intel, and I was going to close the Intel bull put spread. I made a profit by closing the Intel vertical by buying it back at 19 cents, which is $19. I had originally sold that for 46 cents, $46. I decided to transfer that into simply Intel shares. So 6 Intel, 2 Microsoft. On top of that, I decided to double down on 2 of the previous episode calls. One, I liked Microsoft so much that I decided I wanted to buy more Microsoft. However, the account was out of money. 2, I decided to short more Apple stock in order to gain the money to purchase Microsoft. Now, the first time I had shorted Apple, it was actually not really that great necessarily because the shorted money wasn't going anywhere. I believe better than just shorting something is to do a long-short combination. So, coincidentally, 2 Apple shares equated it to be the price of a Microsoft share. So I shorted 2 additional shares of Apple in order to buy a share of Microsoft. Value Town Fund is currently down 3.5%, and that's kind of rough, but it's okay, small sample size. I believe in the long term, these positions will go up. The only position going well so far is Tesla, which was kind of a dreamy position. It's up 10%. And the short on Apple, which has gained 3.74%. Even though Microsoft has lost money, it's actually lost less money than Apple, which means that short Apple by Microsoft is actually a winning trade still. Anyways, though, this is all irrelevant. Someday, September was a rough month, and the early part of October was kind of rough as well. I'm recording this on Monday, and that was a very rough day for big tech. So we start our journey over at Finbox, looking up advanced micro devices. It's a semiconductor company. Most of you are going to know AMD because of the Ryzen chips, which have constantly been in competition with Intel. Currently, AMD is winning the competition. It's worth mentioning that AMD has been losing to Intel for a very long time. Looking at this 10-year chart, going back to 2011, it was definitely losing to Intel, and then going all the way into, let's just say, 2016, it was definitely still solidly losing to Intel. But something happened around 2017, all the way up until now, which has caused the share price of AMD to go up nearly 10 times. So what caused this turnaround? A lot of people point to a queen, Dr. Lisa Su, who is hailed by investing people, as well as anyone who's invested into AMD, certainly, as a real queen and as a real impressive tech leader. She became the CEO of AMD since October 2014, and one thing's for sure, the timeline happens to be really in her favor. So I've got an AMD investor presentation from August 2021, which I'm just going to quickly pan through because it's stuff that is known, essentially. AMD designs chips for data centers, for PCs, and for gaming. In all three of these segments, they are currently better at it than Intel is. And when we looked at AMD versus Intel, we saw these four charts where AMD was taking market share from all CPUs, desktop, laptop, and server. But there's one more point of data now between Intel and AMD, and it's interesting to note that Intel has had a small bounce back in terms of desktop market share. It was looking like that trend was going to be AMD was going to overtake Intel. AMD does continue to make progress against Intel's server market share, though. Now, when looking up AMD, especially versus Intel, I found a gem of an article, and I believe that history is really important to look at. So this is from 2014, December. AMD versus Intel, which is the better stock for 2015? Essentially, it shows the Intel versus AMD price, where Intel has gone up, AMD had gone down, rather. That's throughout 2014. You see that the revenue of Intel was increasing at a higher rate than AMD's. The operating margin of Intel was stronger than AMD's. The net income of Intel was stronger than that of AMD's. And AMD was the underdog. It's tempting to think that AMD, after losing 2/3 of its market value over the past 5 years, could be a good contrarian play based on its recent progress in gaming consoles. Unfortunately, AMD's core CPU and graphics businesses are waging pricing wars against Intel and Nvidia, which are both considered premium brands compared to AMD's budget reputation. This means that as AMD loses market share on both fronts, it has little freedom to raise prices to improve its margins. Looking ahead into 2015, AMD's 28 nanometer mobile Carrizo SoCs could also have a tough time appealing to tablet and 2-in-1 manufacturers, which are already adopting Intel's 14 nanometer Core M chips. Don't make fun of Leo's son. The point is, at this point in time, December 2014, it was clear that Intel was winning. And this has happened in the past before, where leadership had been AMD's, and then it transferred to Intel, and then it transferred to AMD. They're competitive with each other, and I would argue that Intel does have a legitimate plan to come back. It's not going to be fast. It's going to take a long time. It might not happen until even 2025, but in the grand scheme of things, a 3-year head start, it's quite a lot, but will it be a knockout punch in favor of AMD? And I feel like that's the story you have to ask yourself. The big question is the following. Should you be invested in AMD? Should you be invested in Intel? Should you be invested in both? Should you be invested in neither? Well, you saw at the beginning that I was invested in Intel already, so to some extent I've already taken a stance on AMD, which is that even if I decide not to do anything with AMD, I decided that Intel was better, so I bought Intel. The question is, will I also buy AMD? Or will I find AMD so overpriced that I'll short it? Let's take a look at the S&P 500 weighted by market cap. I scroll down, I'm going to hit Intel. It's in the top 100 very easily. It's I don't know the exact number, but in the top 30, I'm fairly certain, or very close to it. 218 billion market cap company, net income 18.5 billion. And these are the primary numbers that matter, I would say. How much money is the company making relative to the market cap? And that'll produce a price to earnings ratio. Price to earnings ratio is 11.8 times for Intel. Now, how about AMD? Well, you scroll down just a little bit, and AMD is in the top 100 most valuable companies in the S&P 500 right now. It's got 124.3 billion market cap. AMD is less valuable than Intel, but it's not twice as cheap as Intel. Now, the big difference is AMD makes $3.4 billion a year. And you can see that Intel makes nearly 5.5 times as much money in terms of profit as AMD. And that's despite Intel not even being twice as big a company as AMD in terms of pricing. So as you can see, people expect a lot of things out of AMD, and possibly related is people don't expect that much out of Intel. So with that all said, let's take a look at the AMD valuation. For AMD, I used a beta of 1.5. Looks like this particular company is very volatile, which makes a lot of sense because they're in a state of massive growth right now. Risk-free rate has gone up very recently. Market risk premium has also gone up because September was quite scary. This is a very high discount rate, 10%. That said, it may or may not be that big of an impact. You can see if it were discount rates that I've used previously of like 8%, it would be a difference of about 6% in the stock value. So the assumptions I made. AMD is closing out 2021 and is expected to close out extremely strong. The first 3 quarters have been very, very powerful, and revenue growth of 60% year over year is not unexpected. That is despite semi shortages. If there were no semiconductor shortages, AMD might be able to have sold even more because they don't produce their own semiconductor chips. By the way, one of the big things about Intel versus AMD, and one of my grand theories is, can Intel really actually lose that much market share to AMD? Because one, Intel is kind of entrenched and they've worked with their customers for quite some time. So yeah, it was easy for AMD to take the fringe customers first, the ones that are just looking for a cheaper price. But perhaps there are quite a few more people who are working with Intel who value the constant relationship than they might value AMD's temporary advantage. But furthermore, if there aren't that many chips, then AMD possibly can't steal market share away from Intel as fast as some people fear or as fast as some people expect. Anyways, the revenue growth of 60% for 2021 is nearly locked in, and this profit as a percentage of revenue is probably fairly accurate, plus or minus. Afterwards, the revenue growth is expected to drop off and then decrease over the next few years, especially as Intel gets more competitive. And profit margin is expected to remain fairly the same, which would make EBITDA percentage of revenue be fairly the same. Under these assumptions, and under that discount rate, the final thing that's important is this terminal value. How much of a multiple do you apply to AMD at the end of these 5 years? And this is where it's definitely more of an art than it is a science. The big thing to note right now is AMD's price to earnings ratio is sitting at 36.2x, which I actually think is fairly reasonable at the moment, because AMD is like doing really, really well and is stealing so much market share away from Intel and has a higher quality product than Intel. And Intel's PE ratio is only at 11.8x. But the point is, if in 5 years, it's AMD that has the earnings crunch, the earnings decrease from 36 down to something like Intel's of 12, that's going to cause the valuation of AMD to go down by quite a lot. And certainly in 5 years, AMD's price to earnings ratio is probably not going to be at the high level that it is now as they face increased competition from Intel. So the big question is, and this is where it gets really volatile, is it going to have an EBITDA multiple of 7 on the low side? You might think, wow, that's really, really low. But history is important, and looking at past valuation ratios, there have definitely been times where EV to EBITDA, AMD has had low or even negative numbers here. That's when the article from AMD versus Intel, which is the better stock for 2015, it's during this period of time where that was written. That's when AMD was actually losing money or not making very much money. It's really obvious looking at 2018, 2019, 2020, and 2021 that AMD is making a lot of money, but the question is, will that stand? Will that stay? It's certainly going to decrease over time as interest rates increase, as well as their competitive advantage decreases. as Intel is expected to fight back. 3 estimates here. The low side. Somehow AMD actually, in 5 years, starts losing to Intel. That's actually quite an extreme estimate and probably not going to happen, but it's worth putting what is quite possibly the worst possible situation. The midpoint that I've chosen is an 18x multiple. It's always difficult to tell exactly what this multiple is going to be compared to price to earnings. My intent, however, is to call this essentially around 15 to 20 PE ratio. And on the high side, that's going to be if Intel doesn't get its act together, if AMD manages to continue their tech dominance, if AMD manages to take significantly more market share than expected from what they're already doing to Intel, we could see AMD's multiple still be this high, or possibly even higher, because right now it is at 41, 42 even. The last 3 years of multiples, this is the last 12 months, 42x, last year was 76x, 2019 was 93x. So it's certainly decreasing, and it's expected to continue to decrease. The question is, what is it going to decrease down to? And that's going to depend based on how well AMD does and how well Intel does. So off of a high, low, and medium conclusion, mostly affected by EBITDA multiple, I came up with the idea that AMD is worth somewhere between $39, which is currently 62% overpriced, to $104, which is, just about fairly priced, has some upside. Some might even claim this is the mid-expected value, but I've set this on the high side. This is my mid value, and this is from a kind of uninformed guess. I think in 5 years, I think a fair multiple is 18x for the EBITDA multiple, and it comes out that AMD is 24% overpriced. But I'm certainly not going to short AMD stock, and I'm not going to bet against AMD stock, because I can easily see this situation happening, where it's a fair price right now, where it returns 10% a year. But the point is, when you trade at this nosebleed multiple, certainly compared to Intel, you have to really believe in AMD crushing Intel, continue to crush Intel, in order to come up with this kind of valuation. There is some theoretical world where both AMD and Intel do quite well. AMD's manages to fix its semiconductor supply, gets a bunch from Taiwan Semiconductor, and sells them with its good tech. Intel also manages to produce a bunch of semiconductor chips and sells them, and Intel increases its technology. Very possible to see a world where both AMD and Intel both go up. However, I look at the AMD valuation and I look at the Intel valuation, and I just feel more secure with Intel than I do with AMD. The amount of trust I have to put in Intel performing well is quite a lot lower than I have to in terms of AMD doing well. With Intel, as long as it manages to not decrease in revenue in 2022 and 2023, and 2023, by the way, is where they're expected to get these fabricators online and start producing these chips. So I actually do expect the revenue to be substantially bigger than 0% growth. And then 2024 and 2025, as long as they manage this is a pessimistic estimate, certainly. And I've got the EBITDA multiple at 7 for Intel. As long as they do that, they are fairly priced right now. AMD needs to continue doing as well as it has, and the multiple has to go down to 18, whereas Intel's is allowed to stay at the low of 7. It has to do that. It has to grow 16%, 12%, 11%, 8% over the next 4 years. And then they actually have to do better than that. The high side is they actually have to end on a 25x multiple. This is the difference between really a growth company and a value company in the same exact industry when their direct competitors. AMD is going to grow into a valuation, and it could certainly exceed the valuation of that the stock price is implying. But when I look at the two, I just look at Intel and I'm like, wow, it's so much more realistic that Intel is going to be able to just not bleed out. And as long as Intel doesn't bleed out, it's going to do better than AMD in terms of valuation. And if Intel actually manages to exceed expectations, and boy, is it really easy to imagine that it's going to exceed expectations of 0% growth, Intel has a much more solid chance of making money, in my view, than AMD does. Which again is not to say that AMD isn't necessarily a good purchase. Lisa Su is a great CEO. But the big question is, has it run up too much? You can see that recently it's been on a little bit of downturn. Perhaps it has run up too much, and despite it going down, over 10% after its high, I still feel like it's a little bit overvalued right now. But I mean, that's saying something, because over the last 5 years, it's gone up 15 times, right? So good job, AMD. To kind of use a Warren Buffett saying, AMD is a great company, but even great companies, you may not want to buy them at this wonderful price. The wonderful price being that it's priced so high that investors are really expecting a lot out of AMD. Whereas Intel, this is a wonderful company that you can buy at a fair price. Or possibly you could even say it's a fair company that you can buy at a low price. And so that's what I did. That's why I bought Intel, and that's why I'm not going to touch AMD here. So that was a very straightforward one. Next stock is going to be picked by Patreon, and it's a great time to join the Patreon. You'll get to vote on which stock to be reviewed next. Patreon gets the most choice over the stock reviews. As well, you get to see my own personal portfolio if that's of any interest. Get to see what my amateur portfolio looks like. So thanks for watching. Let me know if you like the faster pace of this particular video, because it certainly could be done for the others as well. To some extent, though, it is harder to make a fast video than it is to make a longer video. And it's the same thing as writing an essay or a book.